Hey, good morning, afternoon, evening, night, whatever time it is where you are. We're back with another episode of Go FUD Yourself. Evie joined and then left. I was going to do a quick shout out to Evie, but
You still did. Look at that.
I did, but she's gone now, so she can't even hear it. Anyways, it's Monday. So today we're going to do a quick wrap up of everything that happened over the weekend. I was gone, not that anybody noticed. I'm sure we had some incredible guests to end the week last week, so that was really cool. It's weird to not watch the episodes when I'm away. Usually I watch them, but this last week has been a little crazy, and I didn't get to watch any of them. So,
Well, we went
anyways,
bowling, so we really just made fun of you for a half hour. That was the whole Friday episode. Yeah, we
I'm
said
an
F
easy
U J D. Yeah.
I'm an easy target. I give you a lot to work with. All right. So what are we talking about today? We got quite a bit, actually.
We do. So it's a bit of a smorgasbord, though, which I guess is good after a weekend. First thing we're going to talk about is this wacky article in the Globe and Mail, because both of us are in Canada right now. That's kind of talking about the general public sentiment of crypto versus what's actually happening in terms of Bitcoin rally and that kind of thing. Thought it was an interesting way to start it off and just sort of understand what the general landscape of what we're talking about today is sitting within. And then we have some really intensive news. We have Lightning Network with XRP lawyer, and I don't know, we'll get into that. It seems intensive. We have the IRS being challenged. We have the Nigerian crypto exchange learning group is coming our way. So we're going to talk about that a little bit. We're going to talk about Uniswap fees, why people aren't happy about that. And then we'll end, I think, on Base Network. We could talk about FTX some more, but I really don't want to.
Come on.
I don't want to.
That one's more of a public service announcement, but if we have time, we'll talk a little bit about a scam with respect to FTX.
But we talked about it last week a bit.
Oh, okay. Well, I didn't talk about it last week, but it was all over Twitter this weekend. It was everybody was talking about it. So I don't know. Maybe whatever. Anyways,
yeah.
Okay. So quick reminder: we're a live show Monday to Friday.
You can tell
12:30 p.m. Eastern. We're on all the major venues. So if you can help us by share, subscribe, makes a huge difference in our reach and really helps us get the word out. I'm not wearing merch today, so no shout out.
I am.
Oh, but you are. Who's the merch?
I am. I've got my Liquid Collective hoodie because it's snowing out, and this is the biggest, heaviest hoodie I've ever owned in my whole life. Much like Liquid Collective's LSDs. LSTs.
What Liquid Collective are you talking to?
No,
I like my Liquid Collective hoodie. It's like one of those old nice. Thick cotton Champion hoodies. It just feels cozy.
It's like a hoodie. Yeah.
I'm a big fan. All right. Well,
Liquid Collective.
Let's get our little video going, and we'll jump right into it here. Hold on, okay. You okay? Where are we here?
Oh my gosh, JD.
I know, man. Oh, okay. Here we go. All right.
Okay, so before we start, how do you feel about the crypto landscape right now? Are you bearish? Are you bullish? Do you have good sentiment? Do you have bad sentiment? What's up?
Yeah, so this is something that I think is present in every market cycle ever. And it's kind of a mind fuck, to be honest. And the reason that it is because when everybody is elated and excited is the absolute last time you should be buying anything. And when everybody is lethargic and apathetic and or even overtly negative, they say that's the time to buy, and it almost always is. And the article that we're going to talk about kind of exemplifies that a little bit. I'll explain that in a little bit, my thoughts on this. But I think the space as a whole, has to slightly adjust and rebrand itself a little bit.
Mm-hmm.
And we've been saying that for a while, even something as maybe not by calling it Web 5, but some rebranding to the phrase Web 3, I think is probably pretty important. Oh, why can I not connect you back to my headphones? There we go. I got you. Ooh, I got you again, coming in a little hot. So I think, like, we need a little bit of a rebrand. There's a lot of negative sentiment, obviously in the wake of FTX and all this other nonsense. Public sentiment, most of the news has been negative. Oh, Bitcoin's down. Oh, SBF this. Oh, collapse that. Bankruptcy this. Regional banks, interest rates. Like, it's just been a flurry of negative news, and it's really hard to be excited about anything. But if you're objective about this, I think more now than ever before, we can see incredible innovative applications of blockchain technology and how it's really adding value to society. Separate cryptocurrencies. Don't conflate cryptocurrencies with blockchain technologies, because they're not the same thing, obviously. I think we're going to see a lot of new ways of approaching economics for some of these platforms. I think we're going to see new ways of utilizing tokens and ecosystems and figuring out a delineation between actual utility tokens and where and when they make sense, and actual equity or securities, or kind of what the plan is and what those look like. I think we'll see a lot of that in the next little bit. But all of that to say, sentiment naturally is pretty crappy right now. We've been beaten up for a couple of years. And maybe you can kind of talk through what the article said first, and then I'll give you a little bit more.
I mean, sure. So I actually read the article in a physical paper, like a Luddite. But the headline was more about it being FTX, SBF, and how that market, how that has kind of like lost its interest. So early in the month, early in the year, over the last year, there's been so many Google searches for FTX. And within the last month, since he's actually gone to trial, it's declined so much. Yeah. But everything that comes out in the crypto news, as we talk about regularly, is always really negative. Doesn't matter if it's Alex Mashinsky, or last week we talked about there being like a Gemini scandal. Just everybody. It seems to be negative all the time. So if you're in crypto, you're not negative about it. And as such, we've seen Bitcoin's price went up over 70%, I think, this year.
Year to date, yeah.
Year to date. So we're in this funny spot where the public sentiment is really negative. Those who aren't involved in crypto or aren't involved in blockchain have this horrible sentiment about it. They're also getting bored with it, which maybe is a good thing because it opens up the space for there to be some good news. But it's almost as though all of the news that they get is just scandal after scandal. So of course they're negative about it. Of course they don't want to participate in it. But what I thought was interesting was the boredom, is that people aren't as interested. People aren't trying to learn about it. People aren't Googling it. The searches have gone way down, including in some of our other big spaces like in Berlin, where there's like a burgeoning Web3 hub. The average German citizen is like,
I mean, I think these negative headlines lead to greater sentiment being negative, I think, and fear sells, right? So obviously the news outlets are trying to push whatever's going to get ratings. It's no longer getting ratings, so they're not going to do that anymore.
But what's interesting is that like this negative sentiment isn't actually impacting the market. So typically, like imagine a huge brand like, I don't know, Nike or Coke or something like that. If there's a big scandal, if there's negative sentiment, it impacts their market share substantially. Sure. Whereas here, if we're in crypto, we're still in crypto. And if you're out of crypto, you have negative sentiment, but it doesn't impact us.
Yeah, that could be true. I mean, I think you can still be here and have negative sentiment. For sure. But yeah, I don't know. I guess we'll have to see. I think, obviously scandals, that continues during all market cycles. And, I don't think you need, I'm not sure. It's one of those things. Like, I'm not sure that you need to have a whole bunch of good news coupled with positive market movements. I think often they can be inverted. Right. That was kind of my point earlier. So, I mean, yes, in many cases, when things are going well and then there's a scandal, often we can see things kind of die. But this is like looking at specifically the price of Bitcoin. I mean, it's super cyclical. It's not like Bitcoin had a scandal. There was a bear market. Right. And so, I mean, generally, like I said before, when everybody's elated, it is the worst time to buy. Which is the opposite of what you would think. Everybody's elated. You would think this is going to continue. It's kind of why you get that confirmation bias on the way up, right? You buy, it goes up. You buy more, it goes up. You buy more, it goes up. It goes down a little bit, and everybody holds all the way down because they think it's going to keep going up forever. And that's been the case for as long as markets have been public and people can participate. I mean, that's fairly common. Anyways, I'm just happy that we're not hearing about it as much. We talk about it a lot. Maybe we're the problem.
Oh no.
We talk about SBF a lot. I think we're the problem. The difference is we're not being paid by incumbents to shit talk like the traditional media is. So who knows? Anyways, all right.
Now that we know where we stand, are you ready for some regular news?
Well, I don't know if it's regular news. This is like kind of like, what are those? What do they used to call that? Gossip magazines or whatever. This is kind of like tabloids? A gossip magazine. Yeah, tabloids. Yeah. That's what it is.
Well, okay. Yeah. Well, the first one, it reads like that, but in the wake of having read these articles, it turns out that there are some real security concerns as well. So John Deaton, who is a pro XRP lawyer and also a shareholder or possibly a founder in Spend the Bits, which is a protocol on XRP, has decided that he hates Lightning Network. And so this is kind of what's on crypto Twitter. This is what there's a lot of articles about, is that he just thinks it's really not that efficient. There are too many backdoors in Lightning Network's code, and maybe we should be concerned about security. But if you dig into it a little bit further, about one day after he said that, one of the primary devs of Lightning Network, Antoine Riard, stepped down, saying that there's too many critical security vulnerabilities on the network and he will not continue to support the project. So I don't know, Lightning Network, who do you side with? I mean, everything that gets built has some vulnerabilities. How long should it take to overcome those? Where do you stand on this?
Yeah, I mean, obviously, I think this is just competitive positioning. XRP and Lightning Network are probably the two closest competitors to each other. I mean, Tron's trying to do something with respect to payments, but XRP and Lightning Network, in my opinion, are by far the most advanced. Lightning Network is very difficult to build on. It's its own programming language that is very different from everything else. Mm-hmm. Which is good and bad in some ways. It's good because it's less likely to be exposed to consistent critical vulnerabilities that we've seen elsewhere, but it'll present new ones that we don't necessarily know are vulnerabilities, and you can't look for the same fact patterns. Right. So I have to try to stay neutral on this one personally, because I think there's some incredibly sophisticated groups building on both ecosystems. Right. In particular, one of the executives and board members from PayPal is leading mm-hmm. a payments settlement and clearing project on Lightning Network, and is like deeply involved with critical security and different things. So it'll be interesting. This sounds like, from the article, that it was a backdoor, that it's intentionally there as a backdoor, right. Which is some of the arguments about FTX and where some of those assets went and how those hacks happened. So yeah, I see why people are definitely on pins and needles over this.
I think it's a big deal when the primary dev steps down, though, and citing security concerns, not citing like, I love my wife, or I want to go to the Bahamas, or something that we see a lot of other high-profile devs do. But in this case, he said, nope, there's security vulnerabilities that I don't want to be a part of, and I'm not going to be here for it.
Yeah, I wasn't clear if it was if he was the lead dev or just a dev. Okay. Did you see lead dev somewhere? Yeah, I didn't see that anywhere.
But I saw it, but only in one of the articles. So.
Oh, okay. Yeah. Well, either way, I mean, disgruntled employees, like, often, like, the easiest thing to say to really harm your ex-employer is that they're misappropriating funds, or that there's security vulnerabilities. How do you prove that right or wrong?
It says core dev.
Core dev, yeah. Well, he works for the foundation. I mean, it's not something to be completely overlooked, but it's also, in my opinion, to be taken with a grain of salt. So we'll see. I mean, this to me is a little less critically concerning than it is just, I think, competitive jockeying, which is good. I think that's a good sign, to be honest. Once the L1s start competing against each other for mindshare, it's a good sign.
For it. Yeah. Okay, this next one is pretty interesting. So the DeFi Education Fund is a crypto advocacy group in the States. They do a lot of education, as you can tell from their title, but they also do quite a bit of lobbying. I think that they're actually part of the BA, but correct me if I'm wrong. So they are going up against the IRS. They have, which I think is a pretty big deal. They're trying to support an appeal against the IRS, but basically this is from a 2017 court order where 14,300 Coinbase users, their transaction history would then be shared with the IRS. And what I think is really interesting about this is that we just saw last week, I don't think that you were here, but we were actually talking about the new tax laws in the EU related to MiCA and how all transactions will be reported to their tax authorities. And so I wonder if this is hitting news now because of that news, and maybe the people of the US are saying, hey, we don't actually want to have that happen here. But I also feel like it's kind of inevitable if we already see precedent for it in Europe and Asia.
Well, of course they want all that information. So this is a challenge stating that it's infringement on the Fourth Amendment. And in the US, the Fourth Amendment is your right, or what is it? Let me read it here. It protects people from unreasonable searches and seizures by the government. So essentially, like from a privacy perspective, I mean, the government can't just at any particular time have access to all of your financial data, at least currently, without a subpoena or without, reasonable cause, suspicion of a crime. Like they can't just investigate everybody. If you look hard enough, you're going to find some issue at some point with everybody in every business and every, personal financial situation. So I remember this happening in Canada too, where all of the centralized actors got subpoenas from Canada Revenue that they were going back. We got emails from our providers saying, hey, you've been a client here since 14. Surprise, we're providing the government with all of your information, which is actually not what was in the original terms and service. There's a bunch of lawsuits and whatever. But all of this to say, I mean, in Europe, at least they give the benefit of like your taxes are automated. So yeah, they report all that shit, but at least there's a benefit to us. I mean, the chances of automating taxes in North America is like zero. And it's like the bane of my existence. And so I
know that to be true.
I hope if we're in fact, finding a way for the government to have this information, that we at least get some benefit, I guess.
Nice, kind way to put that.
Yeah, I'm trying. Chewing on my tongue, trying to keep it in my mouth.
Okay, let's talk about this crypto exchange in Nigeria. So there's a crypto exchange in Nigeria called Patricia. Patricia is going through some hard times, and so they are now allowing you to transfer your holdings into convertible notes. And so the idea here is that you can get Patricia shares via these convertible notes so that they can restructure their debt and fundraise so that they don't have to totally shut down. One of the reasons that this is probably being supported is that they are already licensed by the Nigerian SEC. So we don't want to see it just collapse as a...
They're the only one licensed, I think, right? As an exchange? Yeah.
I don't know if they're still the only one, but they were for quite some time. Okay.
Yeah, I mean, this happens a lot in down markets also. You have to get creative with restructuring. In this case, debt. In many times in down markets like this, you have to restructure your cap table to be able to raise down rounds and to do things without creating downstream effects that you can't recover from. And so, I mean, to me, this kind of makes sense. It just sucks that it's so early on because they've only been around, I think, for like 6 months.
Yeah, it hasn't been that long. The other thing that's kind of big here is that because it's clear that they might be failing and that they might just collapse, people are actually trying to get their funds out. And so much in the style of a bank run, they went to a Patricia office, which Patricia says is not an office. It's an innovation hub. So it's probably just a place where devs work and there's not actually any like execs or people with autonomy. But I really appreciate that the Nigerians are willing to do the footwork. This was like when they tried to introduce the CBDC and Nigerians just said, heck no. They tried to have a cash shortage and the Nigerians were like, that's fine, we'll trade stuff. I really appreciate that they are on the ground trying to get what they want, and it's kind of no holds bars. Don't love that they're against the Patricia exchange, but I appreciate that they're standing up for what they want.
They might not be necessarily against the exchange itself, but rather the exchange's relationship with regulators.
For sure.
I don't imagine it's quite as above board as relationships in the rest of the world would be. I mean, maybe it is. We'll have to see. People are almost always at odds with the government and centralized authorities. So
it's so weird. I wonder what that would be.
Yeah, who knows? Can't imagine. Hey, it's maybe worth talking about like what the difference is in the convertible note relative to their previous debt issuance. So I'm surprised they were able to issue debt as an investment anyways,
Mhm.
because very, very, very rarely are startups even remotely capable of doing debt financing
Yeah.
from a creditworthiness perspective. So that's surprising to begin with. But essentially, all the risk then of those loans sits on the investor. If they don't pay the loans, they have no recourse, and they're not a meaningful. They don't have meaningful claims, or it depends where they are in the claims hierarchy during a bankruptcy or something, whether they actually even get paid, and it's usually pennies on the dollar.
Yeah.
So, I mean, a convertible note suggests that the value of your note plus the accrued interest converts to equity
Right.
at a later date, and so it gives a little bit more flexibility, optionality for the investor. Generally speaking, though, if it has to convert to equity due to non-performance, the equity is not worth a hell of a lot. So, and equity holders are even lower down the credit hierarchy. It's just different how they get paid and when and so on, and how they get reduced. So, anyways, we're not going to go into all those details. Maybe someday we'll have our crypto attorneys back on. Oh, yeah. Buddy.
Yeah, he's here.
We'll have our crypto attorneys back on, and we can talk about that in a little bit more detail, I think. But yeah, so it's interesting to note why the change. To me, this is pretty standard. It's just unfortunate that it's happening so early in their life cycle. I'm not sure if they're going to be able to recover, but see.
Interesting. Have to keep tabs on it.
Yep.
Are you ready for Uniswap, who's in a very different area of their life cycle?
Yes.
There's 3 different things going on with Uniswap over the weekend. So 1 is that their fees have changed. 2 is that their KYC is maybe too open source. People aren't thrilled about it. And the 3rd is that they burned a 650 billion Haycoin.
What?
Yeah. Yeah.
I
just found it like a couple minutes ago. Apparently they did this on October 20th. They burned 99% of Haycoin over concerns about price speculation.
I don't even know what Haycoin is.
Haycoin was a testing token, but then people started actually investing in it.
Oh, perfect.
Yeah.
How did I completely miss that altogether?
No, it's because I just put it on there. Just like a minute ago.
Oh, I was like,
this is not on you.
What the hell? Yeah, well, maybe if you want to introduce it a little bit, I'm going to read it.
Yeah, for sure. So I'm not a tokenomics expert. Let's be very clear. But essentially, they had this Hay token deployed about 5 years ago. The idea was that it was before actually launching Uniswap. It was supposed to be a test token with a small liquidity pool. Supposed to be a tiny fraction of the market, but again, just kind of a text token. But now that the meme coin is in 6-figure range, people were worried that there was a lot of price speculation about what could happen with it and how it might impact other tokens that are also part of actual liquidity pools. So they just burnt it. They just went for it because they think that it's silly and not useful. Also, the one guy, Adam, he owned almost all of it. And so for him, he felt that it was a good move PR-wise to show that he's not trying to hoard something, but that this was actually a test token and we don't need to keep it.
Super strange.
Isn't it weird?
Yeah. I mean, I think this kind of comes back to, you mean Hayden is the one that owned most of it, yeah.
Yeah, it was Adam Hayden, wasn't that?
Hayden Adams.
Oh, my bad. Sorry.
But anyways, yeah. So I think this is an interesting one. So 15 or 0.15% fees is actually significantly less than it was before. Or maybe not significantly less, but it's less than it was before when Uniswap first launched. We kind of mentioned this earlier, and I think, or I've mentioned this a lot, but the economics of DeFi protocols is not optimized at all. Like almost all of these protocols are not financially sustainable under their current economic structures. And so, yes, the argument is, in TradFi, you're looking at 5 basis point spreads, maybe 7 basis point spreads. This is 15. This is double. So, yes, that is an area where it's a little bit more costly to make the transaction. But then you have to think, what other areas of cost savings exist? And I think they're significant. You need way less employees, you need way less overhead, way less infrastructure. Like there's so much efficiency to be found in blockchain technology relative to kind of finance of the past. And so, I mean, this is really, in my opinion, an apples and oranges comparison. It's not really taking all of the information into consideration here. But I mean, we definitely need to continue this conversation. But I think just reducing the costs and hoping for volume is not necessarily the answer this early. Eventually, cost reduction and massive scaling will be what happens. But we're surely not there. And so, I mean, suggesting that we reduce those fees even further, in my opinion, is super detrimental. Eventually, they'll be reduced. We just have to find better ways to do that, I think.
Yep, makes sense. Well, I was kind of wondering, because people are unhappy about the fee change, and because there is some negative PR about their KYC, if the burning of the Haycoin was just kind of a PR stunt in this time. Like, there's no other reason that it would have happened right now, right?
Yeah, I don't know how Platypus got inserted into this article either, but the article's kind of talking, it sounds like, about here's Uniswap, kind of cool, here's some criticisms, here's some other unrelated shit that's doing something kind of cool. I'm not sure if it was just like someone needed something to write about. I don't know.
Maybe. Let's finish up on Base. So Base Network has released a Base bootcamp, which is kind of cool. They're taking applications until October 27th with fewer than 20 students per cohort, but they plan on doing many, many cohorts. It is an 8-week training course so that TradFi or just trad software devs can get blockchain development skills. And I think this is kind of a cool concept. It especially allows them to groom devs for their needs and kind of pick the top of each cohort. So it is smart for them from a hiring perspective and a professional development perspective. But I also like the idea that possibly anybody around the world would be able to participate in Base Bootcamp and, have their skill sets augmented.
Yeah, I think it's great. Obviously, personally, sorry about that background noise. Personally, initially I thought, okay, what a way to get people with only 8 weeks of experience launching sophisticated financial products.
Totally.
The counter argument to that is, thank God we've got at least 8 weeks of training relative to the normal launching shit. So, I mean, I think this is great. Obviously, this I also see this slightly different. I see this from the venture perspective. This is by far the best way to get your early seed or angel tickets for Coinbase Ventures, and Coinbase has a massive portfolio of venture. It's one of the larger portfolios in the space. I think it's like 5 or 7 billion or something. It's huge. Because they don't really sell anything. They just accumulate, which is kind of interesting. But I think this is great. It's good to see. Ivan on Tech, I don't know if you remember Ivan on Tech. He actually built a Solidity Academy, so to speak. I think theirs was 12 or 16 weeks, and it was remote learning. But this is great. I mean, Coinbase has some of the best engineers, and they've got such a big staff that they can meaningfully pull. They can pull from so many departments to offer actual expertise on some of this. So I think as far as educational programs goes, this is great.
I also want to note that there's a couple of interesting pieces here too. So this one is also async remote, but you will participate on a Discord server for communication directly with base engineers and also students. But the outcome of the course is that you will create and present your own Web3 app. And to participate in the course, you have to put down 1 ETH deposit. And when you complete the course, you'll get your 1 ETH back. And so this both ensures that, one, you already know how to deal with crypto. So even if it's on a centralized exchange, you know how to purchase it. You're probably making that purchase through Coinbase if you're going to participate on Base Network, right? Because how are they accepting it, right? So this isn't just randos. People need to actually have some really basic understanding and have used some sort of dApp before, and then they have to present their own Web3 dApp. And so from your perspective on the ventures, from my perspective on the building, but then also we'll have all of these Web3 dApp case studies that we can utilize and that web devs will be able to bring to a company that they want to get hired at. So I don't know. I think it's pretty cool. I feel like this is a good news item to end on.
Yeah, I'd love to see what the contracts look like for that stuff. Like if those apps end up being obligated to give Coinbase a certain amount of ownership or something. I don't know. We'll have to see. Anyways, all right. We have definitely gone over time today, but it was Monday and it's been a minute since I've been back. So excited to be here. So we will be back tomorrow with another episode because we're live Monday to Friday, 12:30 p.m. Eastern.
Are you here every day this week?
I think so, yeah.
Oh, heck, me too.
Unless we have some unforeseen circumstances, y'all are stuck with us all week. All right. Well, I think we'll end it there. And with that, I say to you, Kiara, go FUD yourself.
Go FUD yourself.
Bye.